This video is going to cover doing your trade journals. So this is a MoneyPress journal that Maggie created. I changed the colors to be a little bit more friendly on my eyes. You can use her journals or this one, whatever. First of all, whenever you go to start a new sheet, you're always going to right click on the master tab at the bottom here on a computer or tap on it quickly if you're using an iPad like I am currently, and you're going to duplicate it, and then you'll pull it over. I always keep this in alphabetical order because that matches. Well, I might have to do that with my finger. For some reason that doesn't want to move like it's supposed to. Usually, there it goes. It lets you move it. Then you can tap on it again and rename it, or right click it and rename it. Once you do that, the next thing you're going to want to do is enter your portfolio capital. I usually do the same amount for the entire month, and then I'll adjust it at the end of the month. You'll want to do your next earnings date, and actually let's start with the ticker here. I always label this the ticker name, and same thing for this. I don't spell out Apple or Facebook because sometimes the ticker can be really simple and the name could be super long, so it's easier just to do it by ticker. You also do the number of contracts that you have total. You leave this green, anything that's a green shaded box you don't mess with. There's also instructions over here in case you're missing anything. This add here button doesn't work on this. Anyways, so on our test tab here, you would enter the next earnings date, and you can find that a few places. The first place I usually go is Yahoo Finance. You can just type in the ticker name, click on it, scroll down, and then they'll either have an exact date or a range. I'll typically enter the lower number on the range here. You don't have to be exact, you just need to know the week that you don't want to sell. So we could add 10/28/20, and that will give you the number of days. Like the instructions said here, it automatically goes green if the amount of time you have until the next earnings date is okay. It turns this yellow color if the date is getting close enough you might not want to sell it, and then it's red when you shouldn't be selling it. I don't think any of mine are currently red, but we're getting closer and closer. So anyhow, that should be all you have to fill out on the top here is the ticker, number of contracts, next earnings date, and portfolio capital. ACC/DIS is an IBD or investors.com thing. You can go to investors.com, type on the search thing here, and enter a ticker. I'm going to do it on Apple again. I love using Apple as an example because my mom has a love-hate relationship with it. So the ACC/DIS accumulation distribution on Apple is a D plus right now, so we actually wouldn't want to get into a trade that's at a D plus on a MoneyPress, but that's the one you can remember. Also, while we're here, if you go on this search, you can see the EPS due date. That is actually the earnings date the IBD believes that they're going to have. They don't always have a date. I don't know if they have ranges or not, but this is the earnings per share or earnings date that they have on their books. So you can go back, and if you wanted to, you can adjust this number to be more exact. Got our D plus here, and D plus there. As far as the date sold and all of these things, you don't have to worry about this second number of contracts right here. I didn't even notice this exit date before, but you don't have to fill this, or this out, but everything from here over and everything from here over you would fill out every time. So when you start the money press, you put in the date purchase, the expiration date, the stock price it was at when the trade filled, or close to it. It doesn't have to be an exact number, but it helps you see how close you were to where the stock was trading at when you actually started that leg of the trade, to see how much value you've lost just from time decay or implied volatility or whatever. You put the strike bot, which for the protection is always the lower one. So this top section is your long protection and how much you paid for it. And then I usually go in and let's just put some imaginary numbers in here. So, let's say 5, 3, 20. These don't affect anything. That's just for your benefit. Same thing with this. But the strike bot does matter. So we're going to say we bought the 100 strike. We bought 2 contracts because it needs to match whatever you did up there. If it doesn't match, you change this one. And let's say we paid $5 for that. On the exit premium, I always put the same number as what I started at, and then I shade it in a different color, which I like to use this light blue color. Because if you don't, what ends up happening, let me just put it back to 0. You can see over here that it's saying you lost $1,000 in the trade. So your profit or loss is $1,000 before you did anything, just because they're saying this is worthless. So I'll either put the amount that I purchased it at, or I will put the about 30% loss. Let's put it at 25. Oops, I'm going the wrong way. I'm still doing the wrong thing here. Let's do this. That's about right. So about a 25 to 30% loss. That's pretty close to my average. When you start a money press, these 2 dates should match. These 2 dates should not. This one should be whatever the next expiration would be. So I would, in my imaginary thing, it would be 1/7. Stock price would be the same here. After you start the money press, you're going to have several lines on the sell thing before you could potentially even have another rolled out position where you had to roll up or roll out or even roll down your protection. So after you initially set it up, these two are going to be independent from each other on dates and stock prices and stuff like that most of the time. So we're going to say the strike sold was 109. Let's pretend they had that. Should have the same number of contracts here and here and there. That will tell you the margin that's at risk, what your profit or loss is. They're accounting for the difference between those two as being a loss. So I'm going to say that I brought in $1.50 of profit, and then I'll usually put between 20 cents and 40 cents, maybe even higher depending on how high the premium is, as a closing thing to just give me an idea of where I'll stand if I make a 73% profit on my short and a 24% loss on my long throughout that same time frame. I wouldn't say that in a week's time it would lose that much value. I'd say maybe $4.35. So you'd make about $90 if you had to close your protection and just get out of the trade completely. You'd make $90 for the week. or about a 5% gain on the actual $1,800 that you have. Now, I don't recommend you doing it this way. I'm just doing it this way to save time. Matter of fact, it's probably, I guess there is no formula, so let me do fill and bring another line down here. So this is pretending you ended up having the same exact strike price for the same exact premium and same exact close amount for 2 weeks in a row, how much you would have in the trade. So if we did it again, you could show, let's say you had 4 weeks in a, or 1, 2, 3, 4, 5, 6 weeks in a row of selling the same exact strike price. You could have that much, but your long is going to be worth a lot less. So you can make like 50% on your money if everything went right. That is very rarely happened to me. I have made 50% on most of my money presses, but then I kept them through a down transition. But this is just giving you an idea of how you can enter your previous trades or even see how a trade would do going forward if you average the same amount. I recommend adding in a couple losing weeks to really get a good idea of what you might end up with. Ooh, so 2 losing weeks in a row and you lost all of your profit. So that's something to try to avoid. Let's see if we could get just a small loss. Yeah, let's do 70. Still $340 versus $900. So it does make a difference. Those losing weeks, you usually get your protection to be worth more money again, so it kind of makes up for it if you just close out of the trade. But you will end up rolling up your protection, and when you do, you'll lose whatever money has lost in time value or intrinsic value as the market moves up against the protection. You can pretty much just count on that being worthless eventually, and that's how your money press would look like if it did become worthless. So you don't want it to become absolutely worthless, or you want to bank in more than 70% profit here. Let's change this to 20 and this to 20. Can see that adds back to your profit. Put this back up to like 350. You're still making a 30% return on your money. That's pretty good. So over time, let's see, this trade journal is kind of depressing because I had 2 bad weeks in a row. So most of these did not make a profit. I could go back and show you my previous trade journal and see some of these that made quite a bit of money. Yeah, I'm just going to go back to when I was doing a better job at doing this. Fourth quarter, third quarter. Might not have opened it recently. Here we go. So these are the bright colors that I do not enjoy that much, but you will be able to see here. Let's just go through the whole list. This is what I did for the first month of money presses. I made $700 on Tractor Supply. Should have quit trading that while I was ahead. AMAT was the only loss I had at this point. Here's the negative number I was telling you about, or red. So made 260 there, 296 there. MasterCard was just crazy how much I was making on that. And then Qualcomm. So you can see across the board, I think I made about 25% to 30% on each one of these trades except for the one loss, or higher. So if you do it right, get out while you're ahead, you can make quite a bit of money on them.